Thank you, everybody, for joining me. My name is Jeff Green. I'm the president of Green Team Realty. Thank you for joining us for the February 2019 housing market update. Let's jump right into the numbers, and then we'll bring in our panel for discussion. So it's a very, very interesting time right now. I was thinking about it this morning. This time last year, 12 months ago, no one was really talking about a slowdown in the housing market. It was all about how fast, how far everything would go. And it wasn't for another couple of months into 2018 that, you started to see a chink in the armor, the wheels starting to grind a little bit. And then all of a sudden, now here we are taking a look at national numbers. You take a look at 18 versus 17, September, October, November, December, all below year-over-year numbers from 17. Some other interesting things to look at over here is just the year-over-year drop, essentially, by each region. 10.3% on the whole, 6.8% in the Northeast, 15% in the West, so on and so forth. So just some very interesting information there. I guess, this is an interesting quote here, right? Spring home buying season is almost upon us, and if rates stay lower, inventory continues to grow, and the job market maintains its strength, we do expect to see a solid spring market. I can't disagree with that. I don't think anybody can. It's just that in my short-lived time in the real estate industry over the last 15 years, where I've really been watching stats closely, I've just never seen the market make quick turns. This is a much slower moving market pace than you will see with the stock market, for example, which will jump up and down day by day. So we're clearly headed from a perspective of number of units sold, we're trending down. And it's pretty much every region in the U.S. is on that same path. But what this is showing us is housing supply. Over the last 12 months, it was in the red, meaning there was just a lack of it. And then in June, there was a turnaround, and now you start to see more supply. Now, a lot of people are saying, well, there's going to be more supply, so transactions will catch up again. I don't know. I'm not so convinced about that. This is compelling. I think this may be one of the reasons why we do continue to have a strong market in 19. And for the record, my opinion is that we're going to have a strong market in 2019. I think the real debate is what's going to happen in 2021, 22. But look at rates. There was a period of time where rates were definitely climbing. I remember these housing market updates when we were doing it, rates were ticking up, ticking up, ticking up. But now here we are, almost half a point lower in January of 19 than what you saw in October, November. And again, the Fed is pledging to be patient with raising short-term rates because they're seeing more and more indicators of a potential recession on the horizon. So they're slowing down their anticipated rate hikes, which were slated in the beginning of at the end of last year. So let's take a look more local. Here we are, Orange County units sold. And I think that there's a lot to glean from the local stats, even as it plays out on the national stage. You can see here that January, while it's the same, almost identical to what it was in 18, it's still higher than 17, 16, 15, and 14. So that looks pretty good. That's a good indicator. Going down south of the border in Sussex County, New Jersey, not the same case. We're at a level just above 2016, below 17 and 18, just for the month of January. Days on market, indicator of how fast things are moving. Orange County, New York, the lowest it's been in 5 years. Sussex County, tied for the lowest that it's been in 5 years. So those are good numbers. Those show strong market. Sales price. And again, you can see if you've been tagging along with us here on these housing market updates for the last few months, you'll know, and you've heard me talk about how price lags activity. It always has in the real estate market, maybe in any market, but certainly in real estate. And I think you're going to continue to see price appreciation through the better first half of 2019. But I think you will start to see prices come down at some point this year. I don't know what month, but I think you'll start to see that. Sussex County, you can take a look back at 18. The highest peak was in 18. It was a little bit of a mixed bag throughout the year, but overall it was a pretty strong price year. And you can see here in January, it's coming out as the highest average price January in 5 years. So that's a good thing. And, I guess a quick comment on prices that, higher prices should draw more sellers out of the woodwork, which ultimately should create some more inventory and be able to allow more units to sell. So we're all hopeful there. Ask to sold ratio. This is the ratio of what is the last asking price versus where are homes selling. It shows on average how much sellers are having to negotiate off the price of their property. And again, the highest ratio in 5 years in Orange County, and the same in Sussex County. Almost, Orange County was 97.5%, and in Sussex County, 97%. So still a very strong market. I think what we're going to discuss here with the panel in just a minute, let's take care of some housekeeping items first. The next housing market update is going to be March 19th at 2 p.m. You can always stay connected with us for the housing market update by going to greenteamhq.com/HMU. And a special thanks to our sponsor, Really, a better, smarter, faster real estate referral network for agents. If you're an agent and you're watching this, join the referral network. It's free. It doesn't cost anything. Jump in on it. Okay. So let's bring in the panel. I'm just going to introduce you real quick. Melissa, our producer, I'm sure has us in gallery view so everybody can see. So Jennifer DiCostanzo, give us a wave. Welcome. Thanks for being here. Karen Gonin from Green Team New Jersey Realty. Jennifer's from Green Team New York Realty. And Michael Gianetto from Residential Home Funding. Mike, thanks for being here with us. So Jen, let's start with you. Our top producer in the whole company. This is a woman that works hard. She works endlessly, I think, and she is somebody who has a lot to say, a lot of validity in what she says about the housing market. So you've heard my comments, you've seen the stats. What do you think?
Just over the last couple of years, coming into this market, technically, starting out January 2019, still fighting supply and demand with that formula with pricing. What's paralyzing what I'm seeing in the market with the reflection of last year is sellers are afraid to list. They're just holding back because there's no place for them to go if they're shopping in the same market. And that is ultimately what I'm experiencing, seeing, on the Orange County side. If a homeowner is looking to relocate and they're not shopping within the same formula with supply and demand, it's easier for them to let go because they can secure housing. But I'm welcoming this market because I think buyers are more educated, sellers are more realistic, and I'm really looking forward to it in regards to inventory opening up.
Yeah, certainly being able to find homes for people that you've been working with for a long time. There's nothing better than that. It's a grind for everybody involved. Us too. Karen, what are your thoughts?
I actually wanted to make a comment first. As we saw, the amount of sales in January in Sussex County was lower than it had been in the past. I think it's important to remember that this is actually a reflection of the fact that we don't have inventory of good houses. We just don't have it to sell, and that's the reason the numbers are lower. A few years ago, and even as early as last year, we had more inventory, so our sales were higher. And I agree with Jen, even on our side of the border, we don't have enough inventory, so it still is a seller's market, and they still are afraid to list. I think I mentioned it last month as well, that I have quite a few sellers that are on the fence, just waiting to see what happens. We have some listings that are upcoming as soon as, I would say, as early as the end of this month to the beginning of next month. But that's what's causing the distortion between buyers and sellers, the lack of inventory.
Yeah. It's funny. Every agent that's been on the housing market update here with us has basically said the same thing, that inventory is a real problem. And I don't dispute that. It's just, when you see the charts nationally, locally, showing what they're showing and the number of units coming down, you can't help but just to think that, maybe less people are going to be buying homes, I think there's probably also a lot of frustration that's set in for a lot of people, and maybe they rented because they couldn't find anything, and now they're locked into leases and they've given up. So, Jen, where do you think, like, take us out, like, what is your opinion of what things are going to look like in 2020, 21, 22? I mean, where do you see pricing? Where do you see activity of homes? Like, what is your opinion?
I truly feel that we're almost at a stable point now, because it's not as erratic as where we were just coming into. The light really went on in 2016, 17, with the pricing increasing, and that was really a very poignant time, because if you bought in the height of the market, you can actually now sell and recoup equity. So that to me was the golden, that's the silver lining in helping sellers make that decision when they need to sell, of how much are they going to recoup. And now is that time, in reflection, where I see the market going in the next couple of years, as long as, the job growth is good and stable and interest rates make home buying and financing affordable. I hope to stay on a steady pace. Everyone, real estate is fueled by circumstance, regardless of the market. People are always going to need to buy and sell. If we can keep and contain it, and just really give leverage to the market with educating our buyers and sellers and strategically strategizing, puts everybody ahead of the eight ball.
So, to your comment about people being able to get equity out of their homes if they bought in the height of the market, are you referring to somebody who might have bought in 2006, 7, 8, and now they're able to sell that home that they bought then for a price higher than what they purchased for back then?
If not, it wouldn't go short, basically. Depending on, I myself bought in 2007 in December. I kid you not, after the ink dried on the contract, I could not turn around and sell my house for what I bought it. So I'm in that, and I get it. But where we are now with the pricing is a good time to kind of step back and walk away with equity. And I think that's referring to many sellers, regardless if you've been in the house for 10 years or 50 years, you're going to recoup on your investment healthy. Yeah,
I think that's a good point. It's good to hear that, that is the case, because, there was a huge loss. Almost 50% of the number of transactions went away inside of 2 years, from like 06 to 08. And it just was a horrific situation for many people. But I guess for those who have hung on, because I too bought in 2007, and I would agree that I have equity in my house at this point from where I bought it. So, that is good. It's, people are able to free up the capital, and even if they can't make anything, at least they can get out and move on and buy something else. So that's a good point. So Karen, tell us about your 2 to 3 year view. What are you thinking?
Well, I hope that we remain in a strong market. I also think that with the rates starting low this year, because we are down in the first quarter as far as interest rates, I think a lot more buyers that were renting are looking to buy. Again, the issue is the inventory. But I definitely see growth in our area. I see a lot of people, for instance, moving from other counties in New Jersey and some in New York, moving to Sussex County due to the lower taxes. So the buyers are more educated, but so are the sellers. This is why you see houses that are priced correctly. So I think this will continue at least for a couple of years.
Your lips to God's ears. So Mike, let's talk about the financing environment. Rates seem to be coming down. Is that going to be the trend this year or what?
I hope so. We definitely saw a little bit of a decrease in the interest rates. It's certainly a factor of what's going on globally. The global slowdown. You have China economy is weak. Europe is getting weaker. Where the reason why we had such a downturn on our rates is because we are the safest investment at this point on the 10-year bond. So it definitely had an effect on the mortgage-backed securities, and now we're seeing these lower rates. So hopefully that'll continue and give us that strong market in 2019, and we can take advantage of it.
So just to recap for everybody, let's make sure that I have this right. I just, always like to reassure myself that I know what I'm talking about when it comes to the mortgage market and how the bonds tie in and everything. So the more risky other assets are, the more money wants to seek a haven in bonds, which drives down the rate that people need to give in order to attract people to buy those bonds, which ultimately lowers interest rates on mortgages. Do I have that correct?
Correct.
Okay.
Yeah. So people
So
invest in the bonds, and the yields come down on the bonds as a result.
right. So all of this instability that you see around the globe actually can be good for mortgage rates to come down.
Correct.
Right. Okay.
Yeah, the uncertainty and instability everywhere else is causing the safe haven in the United States.
Right. Right. Which really has been the case for a long time. You know, it's funny. I have a bunch of friends that moved over the pond to Europe, and 10, 15 years ago, they were like, yeah, you should, sell everything you got. The USA is dead. We're killing it over here, this, that, the other thing. And I tell you, their tune has changed. They're all trying to find a way to come back, because US seems to be the place to be on the global stage.
Well, we have the largest economy in the world, so our fluctuation obviously is can be a little smaller percentage wise, and we're still doing okay.
Right.
I don't think we'll see obviously a crisis like we saw before. We'll see a recession come. We're way on the far side of the timeline at this point. For how often the recessions occur. So we know it's coming. We just don't know when. I just hope we have a strong 19 market. And then I think beyond that, like you said before, I think beyond that, we might get into some shaky economy.
Yeah, it's just I guess, all of us that suffered through that last downturn, at least here in the housing market, are all just kind of like waiting for the shoe to drop, And I don't know. I've been saying for a bunch of years that, if there's no, global meltdown economically, I think the housing market's going to be okay, because we did go through such a correction, from '08 through '06 through 2016, that I feel like our market is actually pretty healthy, at least as it is here in the United States. I mean, I hear little bits and pieces, Mike, about subprime lending happening and, us falling back into the mistakes of these mortgage-backed securities. I mean, you're talking a little bit about it here, but you don't see it happening on a widespread level like you did in '05, '06, '07, do you?
No, you don't have the same appetite on Wall Street that you did back then.
Right.
So there are a lot of programs that are coming back called non-QM programs, qualified mortgage programs.
Uh-huh.
And they are coming out with things that seem to be similar to back then. No doc loans, stated income loans, bank statement loans. So there is product out there that does help self-employed people, but there are still safeguards in place for the ability to repay. They're going to scrutinize a lot more than they did in the past to make sure that these people have the ability to make their payments and not wind up with real estate on their.
Right. So even though these products are popping up here and there's more rails on the road, so to speak, to keep things in bounds.
Correct.
Yeah.
Correct. But there are products out there that some of these people need. And it's becoming a bigger piece of the marketplace.
Sure. And I've, entrepreneurs, a lot of them, have great looking tax returns in terms of how much tax they pay, but it doesn't look great for lenders, so I think that that's a legitimate way. But of course, making sure that, individual investors and taxpayers aren't on the hook for people not scrutinizing loan applications is obviously not good practice. So I don't know. I'm just asking all these questions because I'm looking for what are we missing here, but, in kind of talking with a lot of people each month in these housing market updates, it seems like, a lot of good things have been done over the last 10 years to ensure a pretty good trajectory here for the next bunch of years. So I'm hopeful that even if go ahead.
Just to add on these products, Jeff, is that the money that's behind these products is generally portfolio money. So the banks are lending their own money, or it's hedge fund money. It's not the Wall Street players that were in it before that were supporting it. So we won't have the same bailout situation.
Well, that's good news. And of course, that's why they're scrutinizing the applications because it's their money, right?
Their own risk, right.
Good idea to make people have skin in the game. That's never a bad idea. Okay. Well, that was great. I learned a lot. I hope you guys did too. I hope everybody watching did as well. Would anybody else like to add anything before we go? Nothing? Okay. Jennifer DiCostanzo from Green Team New York Realty. Jen, thanks so much for being here. Karen Gonin from Green Team New Jersey Realty, and Michael Gianetto from Residential Home Funding. Mike, real quick, how will people get a hold of you if they're looking for a mortgage application?
They can call me at 845-496-0836, or they can go to rhfunding.com/Michael Gianetto.
All right, very cool. Jen, you want to give a way to reach you if someone's interested in buying or selling a home in New York?
Sure, I'd be happy to help assist and strategize. You can feel free to give me a call directly on my cell, area code 917-916-9995.
All right. And Karen?
Hi, everyone. I'll be happy to help with anything you need, whether you're buying or selling. My number is 551-262-4062.
All right, everybody. There you have it. Thanks so much for attending. We'll see you next month.
Thank you.
Thank you.